Welcome to Kaupr TV Live. This is the first live session of Kaupr from a studio in Stockholm, and we will be broadcasting in about 45 to 50 minutes. My name is Morten Myrstad. I am the editor and founder of Kaupr, and today I am hosted together with Leon Solbakken.
Yes.
Welcome, Leon.
Thank you.
And what are we going to do here today then?
Well, we are trying to create a news show about the crypto markets, mainly focusing on the Nordics. And yeah, that is what we will try to do.
And Kaupr, we are a media company, Nordic Web3 media company. We have a news site, we have newsletters, we have a YouTube channel, we have a lot of events and are attending events. But what is special about doing things on TV?
Well, it's just a better format, I think. It gives us more creativity, allows us to create better post content, hopefully. So, yeah, and try to make it more fun.
Yeah, we are interacting.
Yeah.
That is part of it. And we can also then, because the format is not that long, we can do a little high level of things.
Hopefully.
Hopefully. We'll try that
together
with the 5 guests that we are joined by today. And I can tell something about who they are. We will first have a guest in the studio here in Stockholm from Bitwise, because there has been a great launch in Stockholm here this week. We will also then be having Martin Leinweber from Germany, which is a macro guy, but also an index guy. So he will focus on the markets, looking back and looking forward. We will also have Magnus and also Skålen discussing the regulation in the US and in Europe. And we will have Torbjørn Jenssen from K33, not talking about Bitcoin standard this time, but talking about the product they have launched this week. We will also share some news as we are going along, Leon.
Yeah, and hopefully we'll have a discussion as well.
Yeah, we'll see if there will be a rant or will be a discussion.
Yeah.
Let's get going. And the first part in this program is this Bitwise things happening in Stockholm this week. And we will first play a short video from what happened in Stockholm, Nasdaq this week. Yes, welcome to you, Marco, to the studio.
Thank you very much for having me.
And what did we see here?
So we were looking at the bell ringing of Bitwise in Stockholm. This marked an important expansion into the Nordic market for Bitwise, which is the world's largest specialized digital asset manager.
And you are the head of the Nordics, as I understand.
Correctly. So I'm the regional director for Bitwise in the Nordics, and the task at hand is to expand Bitwise across the Nordic region and listing on Nasdaq Stockholm and working with partners, old and new, here in Sweden, Norway, Finland, Denmark, Iceland.
But you are not a newcomer to the industry. You have 10 years behind you?
That's correct. So I've been working in this space for since the early days of the crypto ETP industry. When it wasn't really an industry, it was more of an idea of an industry. I'm originally a lawyer and worked in capital markets and contract law. And in 2019, I founded an index provider which focused on the crypto ETP, or at that time the emergent crypto ETP ecosystem. And we grew to become the largest crypto index provider in Europe. And after that, we got acquired. So I've been seeing this space and this industry and this world grow from its early days of people trying to see how you could put crypto on the stock exchange to now being a $250 billion industry.
And Bitwise, we all know them as one of the first ETF providers that were popular 2 years ago when it was opened in the States. And now they are going into Europe and specifically in the Nordics. And why?
For a number of reasons. So just for context, Bitwise has, as a company, been operating for almost a decade now, and started out in San Francisco and based in New York, and in Europe it's based headquartered in London. And now it's recently expanded into the Nordics, and there's a few independent reasons for that. One is about the Nordics themselves, and maybe starting by looking at Sweden. All of the assets under management in crypto products in Europe amount to approximately $16-17 billion, give or take, depending on the market at the time. And out of that, looking at investments into Swedish products or by Swedish investors have approximately between 20 and 25% of that market, which is a staggering number. It means that the activity here is
of the whole of Europe.
Whole of Europe.
Sweden has 25 of the. Okay, that's interesting statistics.
Why is that?
So I think there are a few key reasons to that. One of them is that Sweden was the first place to ever list crypto on the stock exchange in 2015. Nasdaq Stockholm approved a certificate, as it was called at the time, that tracked the price of Bitcoin, and 2 years later that tracked the price of Ethereum. I think that we have an investment culture with ISKs, the typical kind of account that lets you trade nowadays tax-free up to a certain point, and after that you get a fixed low percentage of approximately 0.88% on the amount. And also, if you're a company, you can trade through something called a kapitalförsäkring, or a KF, which lets you do a similar thing where you don't have to worry about the
so in
capital
Sweden,
gains
there
tax.
are policies incentivizing people to invest.
Exactly. So in Sweden, there's incentives to trade on stock markets, trade on regulated markets through your broker, your regular broker, such as Nordnet or Avanza or Saver. And this has incentivized Swedes to learn more about investing, learn more about stocks, learn more about which assets you should allocate to, which means that we have a very high amount of people with these accounts, with these participations, and one of the highest in the world if you look at the investment culture.
But why should you invest in a wrapped product or whatever you call it? Shouldn't you better invest in the real thing, Bitcoin?
Yeah. Exactly. So investing in Bitcoin directly comes with a particular number of challenges. And in the Nordics, one of them is that you have to keep track of private keys. You have to be sort of tech savvy, know to handle a wallet and a seed phrase, and you need to make sure you don't get hacked or you lose your keys. You also need to be a bit of a tax expert, or at least have access to them, in order to track the capital gains tax every time you do a transaction with Bitcoin or any other cryptocurrency. And for most people, this is a bit of a hustle. And for pragmatic reasons, most Swedes are looking to expose themselves to crypto, do that through a regulated wrapper, such as an ETP. And this has been shown in different market studies on the Nordic market on how Nordic and Swedish investors choose to invest. And in Sweden, by far the most popular way to expose yourself to crypto is through an ETP.
And maybe the last question to you, what are your ambitions?
Well, my ambitions are nothing short of being a partner to the Swedish investor. We think that there is a opportunity to come in with the both resources and dedication to this market. So we are, I'm going to be based here and out of Stockholm, and we have a team that are based here, and that's something that's less known about Bitwise is that we have one of the world's most famous research centers for crypto, and it's maintained by in the US Matt Hugen, who I think you've interviewed in the past, and in Europe Andrei Dragos, and we have researchers from different universities that work now at Bitwise and publish research free weekly. It's investment bank grade research, research on macroeconomics, research on things like cryptography, the quantum threat, or the question about the quantum threat versus Bitcoin, or traditional portfolio theory and portfolio analysis. And this is something that we publish completely free and have been doing for quite some time. And we are going to be distributing this in Sweden as well, educating people on this. And I think that people will be interested in receiving real academic research on crypto, written by academics in Swedish as well.
It will be exciting to follow you, and of course not only in Sweden perhaps, but maybe even Norway, where we are from, Finland and Denmark, which we are also covering. So thank you very much then, Michael, for this talk, and we will welcome you again on another occasion. Thank you very much then.
Thank you for having me.
We will just give you guys a little update on what will this show also be about and what is Kaupr. Kaupr is an independent company. We are run by journalistic principles. But we also invite people for different kinds of partnerships. So we can do partnerships with brands, with communities, with companies. And just reach out to us and we can have a talk and see if you can have some kind of brand exposure or visibility on future shows or on other types of platforms that we run. Now we will have a talk about some news agenda. We are covering news both in the Nordics and in a global view, Leon, right?
Yes, we are.
So we will begin with the Nordic ones. So I will take care of some of them. And the interesting thing is that this week in Stockholm, it was not only Bitwise that had a large event in Stockholm, also Virgin, which is the Swedish local ETP provider, they had an event together with Coinbase and Avanza. So altogether, there was a lot of investors out there in the middle of this week trying to understand the ETP opportunities in the market. And also in Oslo, the Danish company Nasdaq had a large event yesterday where BlackRock was there and Aros, which is a Danish brokerage. So there's a lot of things happening also on the event side. On the news side, you know, tokenization is one of the top words at the time. Yeah, and we cover it on a global basis and from Davos or from New York Stock Exchange. But it's also happening in the Nordics. So then NBX, which is one of the Norwegian crypto exchanges, they have this week launched a tokenized silver.
Yeah, and silver is ripping these days, so yeah, I think it's a good product.
So you don't have to carry the silver with you when you are buying this?
Oh no, tokenized assets is just a contract that says that you own silver.
Yes, you have to be pegged to real silver.
Yeah.
But then it makes it possible also for new types of investors to invest in gold and silver or platinum or whatever.
Yeah.
That is what is called tokenization of real-world assets, isn't it?
And it's as you said, there's a lot of talks about this in Davos. It's a hot topic these days, so
yeah,
seems good that the Nordics as well are stepping in.
And on another news, from Denmark, we have Penning, which is also a crypto provider. They have received the MiCA license. And the MiCA license, it's given by the Danish financial authorities. But based on that, Penning and whoever gets that kind of license, then they can compete in all of EU and also the European Economic Area like Norway and Iceland. So I think they are number 2 or 3 in Denmark. Lunar Bank has also gotten that kind of license before. In Finland, there are 4 or 5 companies that have received it. In Sweden, it's only Safello so far. And in Norway, there's none, because they have postponed or giving a new date until 30th of June, I think, to decide. So is Norway always the last one?
I guess so. My expertise isn't really Nordics. I mainly follow the global trends, and especially US, but it seems to lack attention in Norway. But the MiCA license, it seems important. Some people say that it's a gateway to 450 million customers, potentially. So.
And the Norwegian Storting and the Norwegian government supported the implementation of MiCA without any politicians arguing against it.
I probably don't understand it.
That may be a possibility. Okay, that's enough for the Nordics at this time. You talked about the global agendas. Wrap it up. Tell me about it, Leon.
Well, the exciting things is, of course, what's happening in Davos. But the really interesting thing for me personally as well is the Clarity Act from the US, which was passed in the summer from House of Representatives alongside the Genius Act. It was due to pass the Senate before Christmas, but for some reason the Congress seems to have a long Christmas break. And just before it was meant to pass again this time, 15th of January, it got postponed again because Coinbase withdrew support and probably a lot of other things as well. But the Clarity Act is going to give clarity in the US regulated market, and it's going to decide who regulates what between the SEC and the CFTC. Yeah. And yeah, I think it's going to be a big catalyst in the market.
But what is the fight really about between the banks, as it seems, and Coinbase?
Well, as I understand it, it seemed to be a lot about crypto yield. I think the banks are scared that since there are better yield on stable coins, that a lot of people are going to put their money there instead. At the same time, so they were really scared about the yield, and when they sort of tried to make a monopoly in a way on banking with just stable coins and fiat money. Yeah,
because we as consumer, if we can get 3 or 4 or 5% on a stable coin or another type of on-chain tokens or whatever, that could be interesting compared to what we get in the bank.
Yeah, and a lot of crypto exchanges are trying to expand their services. Some are providing lending. You know, in the future, maybe you could get, I don't know, insurance probably. So it's probably, they're probably scared.
But do you think there will be a compromise here? And what does a compromise look like?
Well,
David Sachs?
Yeah, David Sachs had a quote on this, that if everybody is a little unhappy, then maybe they can get a compromise through. Yeah.
And if this goes through then on the 27th of January, or whether it will be postponed, but still, let's say that it goes through on the 27th, will it be a buying opportunity, or will it be a sell the news opportunity?
Well, for the past year or so, I've tried to understand US lawmaking. It takes time, and maybe it's a big chance we will be served a nothing burger again.
We will be following it and look what is happening.
Yeah, and Donald Trump said yesterday, I think, at Davos, that he is going to sign that bill, and he will do it very soon. Yeah, very strong. Yeah.
Okay. We will talk more about Donald Trump later in the show. But now we will have a look into the market last year and the outlooks. And to help us, we will introduce and welcome Martin Leinweber. Welcome, Martin.
Yeah, hi everybody.
Thank you very much,
Thank you
Martin.
for having me.
Yeah. And we have talked to you before, but on a totally different occasion, because you came out with a book about the crypto and business opportunities for a couple of years ago, and today you are working as a director in MarketVector. Tell us a little about you.
Yeah, so I'm a classic TradFi guy. Yeah, so I was for many years, or for most of my career, I was a bond portfolio manager, managing global credit portfolios before I joined MarketVector as heading the digital asset research and strategy there. And now I'm responsible for new indexes in that space, ideas, content generation, and yeah, that's maybe the reason why I'm here today. And yeah, so I have a close eye on the crypto markets, but due to my background, I still follow also the TradFi markets, and I think that's super important when it comes to crypto.
And if we look back to 2025 and a little before that, Trump was elected. There was signs that things would happen about crypto regulations in the States. Everybody was bull and thought that we will go sky high in 2025. It didn't happen. Why didn't it happen?
I mean, it was a bifurcated market, so to say. I think for the overall crypto market, you can say that January was the high last year with all this Trump enthusiasm. And it was still a very good market for Bitcoin. And I think that also broke on October 10 when we had these massive liquidations on crypto exchanges. And then that gave also the final break for Bitcoin. And so why was it a Bitcoin market? That's maybe the more interesting question. I think there are two things. So there was a huge supply of new coins. There are millions of coins out there. New coins which were also not beneficial for the token holder, right? You had constant new inflation of these newer protocol tokens, which dragged the price down. And then there was also an alternative, right? People went to AI stocks, quantum stocks, all these new things. And Bitcoin, I think, was a survivor due to also this store of value narrative. And you mentioned it at the beginning of your show, silver and precious metals. That's the thing at the moment. And I just think we have to work through due to the supply overhang we still have from this October 10 debacle. And that was, I think, the main driver for last year. And we can talk about what comes next year, of course, also.
Let's first get some understanding around this 10th of October. What really happened? What was the trigger? And what was the breadth of what the changes in the market?
I think it's still open what was really the trigger there, but what it has shown basically is that you had a lot of, or you have a lot of unregulated crypto exchanges, and there's not just enough liquidity in the system. And a lot of crypto exchanges and also market maker with this sudden break of the market had a problem to keep their APIs open. Liquidity completely dried up. At market makers couldn't reach the exchanges anymore. And still to today, it's unclear who bought all these auto-liquidated tokens. It's also maybe a special thing in the crypto market that you have no clearing house in the middle. Things that, with the traditional market, with the CME or SIBO, everything is automated. Yeah, so you get automatically liquidated if you hit a certain level, if your margin is empty. And so I think most of the exchanges bought that stuff, and Binance was, as the largest exchange, also one of them who suffered the most. And I think this inventory now has to be sold over time. And that's the thing what I meant is dragging the market at the moment. But it became pretty clear that we still lack the institutional quality we are used from the TradFi markets. And I think that also will change going forward with the more TradFi names entering the space. Also, you mentioned the Clarity Act, right? So larger and more established players will enter the crypto market. And I think that will also bring more institutional grade quality going forward when it comes to the exchanges.
But the market also recovered pretty fast compared to like previously crashes. For example, FTX. FTX was sort of like a bear market trigger in a way, but it hasn't felt like this now.
No, I mean, you had this V-shaped recovery within 2 to 3 days, but since then you see that the market is getting dragged down, beginning by Bitcoin, but also every other altcoin at the moment. And you see that when you look at the Bitcoin dominance, yeah, so Bitcoin's market cap against the crypto's total market cap, it's going up again. So you see that the higher beta assets, the altcoins, are suffering more. And that's what I mean. You had this recovery at the beginning, but it seems that some participants who are still in, and that's not the retailer, I think. It's really these players who bought this flash crash are liquidating surely but slowly what they've bought at these lower prices, right? It's really an overhang we have at the moment. And I think the retailer, the classic retailer from the last cycle, 2021, is almost not existent here. Yeah, it's really the ETF players. It's more the hedge funds, the family offices. You also saw that how the market reacted on Trump moves. Yeah, there was an announcement on Saturday. There was no movement in crypto at all. And then when the Asian market opened, when the TradFi market opened, lower, also crypto then got dragged down. And that speaks for me that the more institutional TradFi crowd is in, and the classic retail crypto degen trader is out.
But what about the other ways of investing right now? Because gold and silver is really skyrocketing. Is this a flight to safety? And what about the digital gold, Bitcoin? Will it then come after the real gold, or what will happen?
That's a very good observation. So I think the market in general, what you see is a classic rotation. Yeah, it's not dominated by the Max 7 anymore or just by US stocks. You see a rotation from growth into value. You see a rotation from large cap to small cap. You see also a rotation from US stocks to international stocks. So this is really a broad bull market we are in, and we see commodities are back. And normally that's a long-term trend over several years. That's nothing what you just see over some weeks or months. And now when it comes to Bitcoin, which is definitely a store of value or digital gold, is suffering, and that's a question mark because Bitcoin, gold and silver is going up a lot. But what you also see is that the correlation between Bitcoin and gold is almost zero. And why Bitcoin is suffering at the moment, and again, I think it's this supply overhang. We just have to go through it. I really expect that Bitcoin is catching up to gold again. When you look at the chart, I still think that if you compare Bitcoin against gold, that Bitcoin can suffer a little bit more and it goes lower. But over this year, I really expect, because the store of value gold thing is really a longer term trend, that Bitcoin is catching up. Why? Because Bitcoin has all features of gold, and some of them even better. Yeah. So durability, decentralization, both share that. But when it comes to verification, divisibility, Bitcoin or portability, Bitcoin is clearly beneficial, but it's not that well understood from the masses. And so I think it's still important that we do education, such as here with this format, for example, that people understand really it's not just a risk asset. It shares a lot of similarities with gold. And I think it's just a question of time before this relationship is going up again.
Who do you think will drive the next phase then? Are the retailers suffer that don't have any money yet, and it will be the institutions that will drive the next phase?
Look, I think the Clarity Act will pass this year. And with that Clarity Act, I think really the super large players in the US can finally enter, meaning the real money, the large asset managers, not just the hedge fund managers and family offices. Yeah, so they are also important. Yeah, but they are doing more of these basis trades, derivatives-like things, and are more trading oriented. But when I speak of institutions, I mean the large asset managers, insurance companies, pension funds, and so forth. And when they enter, they bring the big pockets. And I think retail will also follow, right? It's just a painful experience they had over the last 2 years or so. And I think with that larger pool of money, a little bit will also enter the crypto market. And as we are still so small, I mean, it's just a $3 trillion asset, crypto as a whole. And when we speak about asset classes, yeah, we speak about hundreds of trillions of dollars. And if they just shift a little, a few percent, 1%, 2%, 3% into this new asset class, this will bring a lot of upwards pressure, because keep in mind, we are at such depressed levels. Also, liquidity is really low. It doesn't take that much to bring that asset class up again. And so Bitcoin, of course, the granddaddy will benefit first, then Ethereum, Solana, of course. You will see a lot of new altcoin ETFs in the US. And I also think that will bring new liquidity. And so we have to see. I think it's more something for the latter of the year, because keep in mind, we are also in a midterm election year in the US. And that's normally a weaker year. Normally Q1, Q2, very weak, before we see a more positive Q3 and Q4 again. And by the way, if that's the case, that we are going up in Q3 again, then that would also be, again, a classic 4-year cycle, right? We had a top in October last year, and we have a bottom somewhere in Q2 and Q3. That would be a classic cycle again.
Thank you very much, Martin, for your insight and for your overview of the possibilities also in the market. And of course, we will follow and perhaps welcome you again on a later occasion, Martin. Thank you very much. And now we will move on to the next session, and one of the drivers of the market that we have seen in the couple of years here, Leon, is politics, or specific politics. Do you have one word that you would like to mention for me?
Trump.
Trump, yeah. And what we will show a clip first, because you had digged into what has happened with this story around Trump the last year.
Yeah. So we could just watch the clip.
Crypto, they're going to let it grow. We're going to let it grow. On day one, I will fire Gary Gensler and appoint a new SEC chairman. We're making the United States the Bitcoin superpower, the crypto capital of the world. So much, you may even get tired of winning. And you'll say, please, please, it's too much winning. We can't take it anymore. Mr. President, it's too much.
Too much winning?
Not yet. Well, I think that Donald Trump, he shifted the focus in the United States for sure. Before he came in, the previous administration was really hostile against the whole industry. And Trump definitely has turned that around. And if you ask the question, has it been good or has it been bad for crypto? Well, it depends on many things, but it's pretty clear that he has done a lot of things that weren't really visible before he came in.
Which tasks or things that he did was on the positive side then?
Well, he has, of course, signed the Genius Act and will probably get Clarity Act through, which will give clear regulation on digital assets in the United States. He also appointed a crypto czar. He changed out the old SEC leadership, which was really hostile against the industry. He is determined to make, as he said on the video, United States the crypto capital of the world. Because before Trump took office, a lot of companies were fleeing United States because of the hostilities, basically. Yeah.
But on the negative side then?
Well, he launched meme coins. He has threatened with tariffs. He has been trumping it up. Yeah.
What are the numbers? You have found the numbers
I
in
have some numbers on 1 year back compared to today. But when he won the election in autumn 24, that was when we sort of started to see a lot of the altcoins really start to move again. But then he took office almost a year ago, and Bitcoin is down 13% compared to 1 year back. Ethereum is down 9%. Solana is down 50%. And Trump coin is down 86%. So normal meme coin chart on that one, I guess.
Yeah, so it's plus and it's minus. And of course, there was a problem with the old regime that they were fighting the industry, and not with politics, but with the law. So they were trying to stop things happening without any transparency, without any type of overview. So these guys that now are running, for instance, the SEC, seem to be transparent, seem to have an innovation agenda. But still, I'm a little...
You're not...
I'm not.
You don't think he has been good for crypto?
No, I don't really, and that is because of his business agenda for 30 or 40 years. Are you doing business with Trump? You get hurt sooner or later.
Well, I don't know, but yeah, and of course, it's like I think there's rumors about his son, Baron Trump, making a lot of money on Polymarket. Well, I think you could basically you can go on Polymarket and bet on Trump saying weird stuff, and you'll make money. So you could probably do that.
You didn't have to be an insider, you mean?
No, yeah, you probably didn't need to be an insider.
Okay, Leon, is that enough of Trump so far? But we start to go maybe to the next session.
Yeah, sure.
Because then we will discuss some of the things that is discussed in the regulating environment. And we will welcome to the show two major experts in the European and Nordic regulating industry. Magnus Jones and Åsa Skålen. Welcome to the show.
Thank you, Morten and Leon.
Yeah, thank you. Great to be here.
Yeah, and we thought we should start not necessarily on the politics. Okay, if you want to evaluate Trump, you can do that. But we had invited you primarily to try to understand what is the status of regulation. If we start with the US at the moment, Magnus, if you can kick it off.
The state of regulation, and then you're referring to the Nordics?
No, let's start on the US and the importance of the US.
Okay. The importance of the US, I think you touched upon them, Morten, in terms of, call it the geopolitical element. It can seem from the outside that this will have huge waves in general. but it could also turn into the opposite. This week, I was in Davos and hosted several roundtables, keynotes, facilitating different groups, including being part of, for example, Circle invited me to their roundtable covering stablecoins, frameworks, regulations for that part of the industry. So I think it's also important to zoom out here a little and don't call everything as one thing as crypto or digital assets or what. It all depends on our looking into Bitcoin per se alone. Is it stablecoins? What are we looking into? Because what was discussed there was also naturally the effect of where is your ultimate holding company's ownership, i.e. is it US based or not? So not mentioned specifically, but I think you understood, call it the angle of degree when I also dropped down to the note at that roundtable for Circle that maybe, an element into consideration is that they are US based. You have to take that into concern if you're using their infrastructure. Is that for or against? And I think only time will show towards if that's a pro or a con element into totality. So even though I could, and I salute and encourage in terms of bringing clarity of what you have mentioned already. I think still there could be noise connected also to the cross period of he will be re-elected or not if he changed the laws or whatever, or if it will be a political change that could also affect it. Having said that, the Genius Act and others who has been developed there, as far as I have seen, is a pretty good and strong framework. So I wouldn't expect someone to change it, but you never know in politics. So I would say it's a good fundament and a basis to go on. But still, to end on that note, we are at the level where we are discussing, like at this roundtable and at mine roundtables I had there, international standards. So this is very, you call it US centric and specific, and it will have to be adopted so we can actually fulfill the whole mantra of tokenization to be able to send an asset cross-border, peer-to-peer. But a little ironically, you will maybe see that in practice, due to legal, tax reasons and others, you will have to have a third-party trusted intermediary in the middle. And this is where, call it, the geopolitical elements can come in towards who is monitoring, who has access to the data, who can watch behind it. So I think that's also elements that needs to come in so we don't see ourselves blindly only on, call it, a piece of paper that apparently boosts, of course, the news and the interest based upon the strong position that US has in itself. But we have to break it down a little further in terms of getting it actually into well-functioning ecosystem and not just throwing out real-world assets like I heard all over the walls. But when you go 2 steps down, there are more challenges surrounding explicitly on the tax and the legal side of elements. So from that matter of sake, I would say we should follow it closely, and it's a good fundament, but it's not the key to open up everything.
So what you are more or less saying is that one issue is the political or the global or the psychological effect of the laws, and another thing is how it is implemented for companies or exchanges or investors within different kinds of jurisdictions. But if you look into Europe then also, and into the MiCA, which is the market regulation of crypto assets in Europe, it's run sort of by the EU fronting it, and also, for instance, the Nordic countries are on board on it. And what is the status as you see it like right now also regarding the industry in the legal perspective in Europe?
Well, I mean, MiCA, and as Magnus touched by, when we're talking about crypto assets, we need to specify what we're actually talking about, because it covers a lot of different kinds of assets. And I consider MiCA most of a legislation that it catches those assets that are not caught otherwise, and other kinds of regulations, such as our current securities market regulation. So I think that's an important point to make, that when we're discussing crypto assets, it's very important to understand what kind of crypto assets. If it's a tokenized financial instrument, i.e. a digital financial instrument, you're actually in MiFID and not in MiCA. But going back to MiCA, I mean, it's being implemented. There is a grandfathering period among the 27 member states that differ. So certain countries have come further than other countries. What I've seen, which is a challenge in Europe, is that we have this MiCA regulation, and being a regulation, it's directly applicable in all countries and should then be interpreted and applied in the same way in all countries in Europe. However, that's not really the case, since we have 27 different national competent authorities who interpret and the rules more or less strict, and they can in some instances go further and in some instances not as far. I know Malta had a problem with this because they granted authorizations to certain crypto asset service providers where other countries in Europe did not really consider those requirements to be fulfilled. Whilst talking from a Swedish perspective, we have a financial competent authority which is very strict on the wording of the regulation and requires a lot from the crypto asset service providers applying for this. So I think we're in the middle of the implementation phase right now. Certain countries have come further than others, and we're seeing the differences in how implementing MiCA is just showing right now.
As I understand it, stablecoins is regulated via MiCA in Europe. But for instance, when you're talking about the tokenization of real-world asset, which is really much buzz at the moment, that is there misinformation in the market that people think that now is just to go ahead, but you still have those 27 national laws regarding stocks and regarding värdepapper also? Is that the case? That people don't really know?
Yeah, that's a really good question, and something I'm extremely interested in, because we're talking about tokenization of real world assets, but it goes back to what kind of asset are we talking about? Because it's the tokenization is more like a technical digital thing, and our rules should be technical neutral. But you always have to go back to what does this token represent? What is the real world asset? And in that case, Morten, it's correct. If we're talking about financial instruments in the form of shares, this also differs among the European countries. Like the definition of financial instruments actually differs depending on which country you are in. Which also makes this very difficult in one capital markets union. But yes,
but if we take, if we take it, come on.
Could I add to that, Morten, that I think also an important element is that if we leave, call it just the regulatory noise aside, you also need marketplaces, you need liquidity in it. And that's still a key issue to the whole industry. So that's why I'm just saying, I've heard this for so many years, just throwing out the real world assets thing. Now it's happening. Yes, the frameworks are getting, call it, clearer and clearer, but still we need to narrow down to four corners of which jurisdiction, who have you onboarded, where are you trading it, how are you trading it, how freely is it traded, and all of that part. And that's just down to which marketplaces is actually regulated and allowed to trade these type of assets and which type of customers they can also have on. So this is why I'm just saying, I'm not, it might sound like I'm a little negative or whatever. It's not about it. It's just bringing in the realism of how the current landscape is. So naturally, there's a lot of talk. But if you just try to go 2 levels down while discussing these things, you will figure out whether or not this player has actually understood it or not. And it's unfortunately, I would say, very few actors out there who has understood, call it, the real world potential like it is in real world assets. It's more like real jurisdictional assets that is narrowed down to some places. So that's also the totality that we need to put into the whole picture, not only also and me being party killers of saying this will not happen. It's totally doable, but you have to understand, call it, the real of them in some other and put it into a context which does not necessarily match up with the big hairy words of Mr. Trump that we heard initially in some other. But will they grow? Yes, indeed. Will it take time? Also, yes, indeed, it will.
Maybe we just wrap up in the end here and try to, is it still positive? Is Mika still moving the market in the right direction? And you guys could also take into consideration some of the other roles that you have. I think that you, Magnus, is a board member in K33, and you also is a board member in Safello. You don't have to answer on behalf of them, but you are now being able to see what can this practically mean. And will it then be more protective of the investors? Will it be new business opportunities for the industry, also for the Nordics? Magnus first, and a short one this time.
Yeah. Then in brief, that it's not about Mika. It's about all surrounding it, including, for example, DORA, Digital Operational Resilient Act of IT Security. Who do you use as third-party vendors? That is what is blocking. I'm seeing this from several other companies. They apply for Mika, nothing per se wrong with the Mika application. However, the FSA or the local competent relevant authorities, they have questions to other parts and frameworks that is surrounding it. So we have to understand that Mika is just a small piece of the big puzzle in the EU's digital strategy package. So in this matter, you have to have so much more in place, i.e. one thing is to look into Mika as of now, but the requirements that will come up, the controls that will come up towards just having a competent, fit and proper board with both the combination of the experience of the TradFi world and blockchain world, that I think will lead to challenges for several companies in general, because it's just a lack of persons out there who can handle it. So we have just seen the start of Mika per se. Yes, on some area it's driving forward, but it all depends on, call it, the size of your organization, where you are, how it's structured. So it's a classic legal answer, unfortunately. It depends. It's on both sides as far as I see it. But at least from the global perspective that I picked up in Davos, I would say that US side, etc., are seeing it as a positive, general positive thing, as long as you can afford to handle all the hurdle that is down there. So I'm just saying it from the small parties' point of view. I see it as a restrictive thing that could be dealt with in a different way, which we also had deep conversations on in Davos in terms of frameworks that could be in place, of saying a leniency period where with less restrictive actions for 1 to 2 years or something in up until different threshold, etc. So that might be things that comes up. But as of now, we have to live with the current framework that we have. And that is at least driving, call it, clarity on many areas, not even all.
What do you think then also? Because we are already seeing movements happening in the Nordics. OKX and Bybit is going into the Nordics. Safello is going into Finland. CoinMotion is going into Sweden. Also companies that don't have a Mika license is telling that they will go abroad, like Firi, for instance. Will this mature the industry? Will it be a more open, transparent environment? What do you think?
I mean, besides what Magnus mentioned, I believe that Mika, with all its flaws, is still a good approach forward, because it does include these crypto assets in the financial regulations and the financial framework. There are a lot of challenges with Mika, among others, as I mentioned, different kinds of implementation in the different member states and EEA states. However, that's, I would say, more or less the same with all financial regulation within Europe. There are always different applications and implementations. It also applies to asset management legislation, or like alternative investment funds, and also MiFID and so on. So that is a problem we have in Europe, generally speaking, with financial regulation. I also believe from a business perspective, it's important with regulation because it sets clarity in doing business. And to my understanding, at least, as long as businesses believe that the regulatory framework and legal framework will remain more or less the same, they can handle it and make business based on that. It's more difficult when you don't really know, when things change from one day to another or week to another, which we've kind of seen now and touched upon already. Mika is always also good because if you do have a CASP license or you are a licensed issuer of some kind of token pursuant to Mika, you are entitled to use this European passport, as you mentioned, Morten, going through and providing your services all over Europe. And my final comment is just on what Magnus mentioned, that we're party poopers, and unfortunately sometimes we are. However, I want to stress that I believe that clear rules, or as clear as they can be, and a good legal framework is also a requirement for the success of digital assets, because we can't, it's easy to just run ahead and not think about what could happen if something goes wrong. By just thinking a little and holding back and making sure that the investors who invest in these digital assets actually have a legal framework to rest upon if something goes wrong. That's also crucial.
Thank you very much. We have to go to the last piece of this program, this show, and we thank you very much, Magnus and Åsa, and we recommend that people follow them and see what how the legal requirements and regulations is developing in the European and Nordic context. Thank you very much. We will then welcome Torbjørn Bull Jenssen. Mr. Bitcoin, no, Mr. Bull, maybe.
Mr. Bull.
Yeah.
Yeah, probably.
Yeah, probably. That was the phrase that someone else found. I didn't catch it. I heard about it. It's really funny. But but welcome, Torbjørn, to the show.
Thank you so much.
And this time we are not talking about crypto bros from 2009. We are talking about Bitcoin in 2026, because you have done something new this week. You have launched a new product. And what is it?
It's crypto collateralized lending. So what we see is that there are a lot of people who have pretty sizable Bitcoin portfolios. And even though the price has been falling recently, they are still strong believers and want to hold on to those assets. While at the same time, they might have some other investments they want to do. They might have some bills they want to cover, or even might want to increase their Bitcoin exposure. So what we're offering these clients is the possibility of using their Bitcoin as collateral and then borrow USDC. You can also use Ethereum and potentially other coins as collateral, but we mainly focus on the most liquid ones now to begin with. It's also, strictly speaking, possible to borrow Bitcoin should you have a trading strategy, say an arbitrage strategy, or a desire to short Bitcoin, borrow and sell it, and similarly collateralize it with another asset. But long story short, crypto collateralized crypto lending.
You have also argued that this product is also linked to the treasury strategy that you have on Bitcoin. How does it work?
Absolutely. No, so what we do, we have 141 Bitcoin currently on our balance sheet. And some of it we use as collateral for our own matched principal trading and getting better terms on our execution, enabling us to offer even better prices to our clients. But what we're also doing now is going to use that as collateral to borrow, say, USDC, that we can then lend out to our clients. So theoretically speaking, you could build this crypto collateralized lending model purely on the collateral of the client. But by combining that with equity, with our own balance sheet, we can get a more robust, better financed setup. So in this way, it's a kind of bank-like where you have the funds coming from the clients as collateral, but you also have company equity. So this is a way for us to truly drive yield from our Bitcoin, to really, as we do exactly as we said when we raised money and bought Bitcoin, put our balance sheet to work, use it as a product enabler, and use it operationally.
You have sort of argued that there are apples and different kinds of apples in this treasury structure, and which has been a really, really high growing category for the last half year. You have argued that you have to have a business idea, business concept, not only accumulating Bitcoin and just hold it or whatever. Is this the first proof that you are putting it into work?
It's the first. Well, it's the second proof because, as I mentioned, we've already used it to improve our trading offering, the core offering of kind of buying and selling at K33. But this is much more scalable in a way. So this way we can utilize and put to work a much larger portion of our balance sheet, and even actually. I hope if we are as successful as I think we can be, that we would actually run out of capacity, meaning that there would then be a direct benefit from increasing the balance sheet further. That could be through partnerships, it could be through M&A or kind of potential kind of reinvestment of profit or fundraising in the future. But I think what is really exciting now is that now it will take a bit of time to build up the loan book. But kind of depending on the success there, we can truly prove to the outside world that we are actually able to do what we set out to do, which is to run an operational business, generate a real yield on Bitcoin, really having a benefit of a strong balance sheet. And it's funny because it was last summer I had this opinion piece in CoinDesk where I argue that having a funding strategy is not a business strategy. And I got a lot of hate from parts of the Bitcoin kind of treasury community for that. They claim that I hadn't understood it at all because it was only about printing shares and buying Bitcoin. And I said, well, at the current phase, that was the play this summer. But it could very much happen sooner than many thought that the need for actually generating yield from your balance sheet would come. And I mean, it was kind of obvious. If you're an economist, you saw this coming. And now we're doing exactly what we set out to do.
The last question about this lending product is only available for some clients, or how is that working?
So, I mean, at K33, our focus is on those who are trading for, say, 1 million NOK and upwards. So we work with larger retail, larger private clients, corporate clients, and smaller institutions. And it's the same for this lending product. I mean, these will be bilateral loan agreements. So we haven't set like a fixed minimum loan size, but we will not issue any loans below, say, 1 million now to begin with. Down the line, we may look at kind of more automated, more retail-facing versions, but that's not at all the current focus. So the focus is on the larger clients as it is for all of the services that we offer and bring to market.
Thank you very much, then, Torbjørn, and we are looking forward to see how this product is gaining traction. And we are also familiar with other companies going into this debt space or whatever. And thank you very much, Torbjørn. And we will now finally closing up this show, which lasted a little more than we had planned for Leon. Maybe we are fond of talking.
Oh, you blame this on us?
No,
or?
maybe me. But is this also then the last one? Is it a proof, as also the other things in the talk, about this merger between traditional finance and crypto and Bitcoin? Is that what is happening at the moment?
Well, it seems so. I haven't really prepared anything on this, but yeah, it seems so.
But we will cover that going forward, the integration between classical traditional finance, fintech, and the crypto or digital asset, whatever you like to call it. And we will be back in 1 month. In between that, there are a couple of interesting events that you can find on the Kaupr event calendar. A couple of them. One of them is a digital asset conference in London, where we will be, the Kaupr team, reporting from in 5th and 6th of February. And in Norway, there is also happening something which is called a speech from an address sort of from the Bitcoin community, the Bitcoin Policy Institute. I will have a speech on the 11th of February at the National Library in Oslo. And it's not accidental that they have it at that time, and it's not accidental that they are calling it the annual speech, because the day after, the chief of the Norwegian bank has her regular speech.
It's about sending a message, I think.
Yeah, sort of. So you have then Bitcoin, not a crypto, a Bitcoin speech on the 11th, and you have a fiat speech on the 12th. So if you want to compare them, you could join perhaps both of these events. In the meantime, thank you, Leon, for hosting this together with me, and thank you to and thank you to the viewers that and the guests that we have had today. Hope we will see you again.